set. All engines go. Welcome to the angle. Let's start the show. Hold on tight. The stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel the run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower that your financial life may or may not have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we have a sizable lineup of things, segments, I guess I should say, to give you all as much information as quickly as possible. So as per usual, we'll start off the day with some live trading and market analysis. We're going to look at the week ahead of us. Be very mindful, especially if you're tuning in right now, that Thursday the market is closed in observance of Juneteenth. We'll talk more about that in a little bit. And then I'm going to do a special around 9:45, 10 o'clock, specifically on the Israel and the Iranian conflict right now, and more or less what to look for in the market. So not necessarily the political side of things or anything as it pertains to the politics sides of it, whatever side of the fence you fall on. I personally don't care. And for this aspect of this conversation, we're going to focus on the market. So we're going to focus on 4 things that have already happened and 4 things to look at into the future of how this conflict as it unfolds, what you should be looking at from a risk perspective and from a just general market perspective, give an idea of what to keep an eye out for going into what may be happening in the near future here. So start off the day, we're up on the market a little bit at the open. We're over 600, obviously a very key level. We saw Friday, we moved down a little bit here, not a fantastic candle, coming down off of weird volume up in that low 600s area, which we've talked about if you've been watching the program, getting a rejection with higher volume on that Friday. But before we get too deep into the market, as I like to do with you guys, I want to run down some of our catalyst watch for this week specifically. So let's pull that up and get an idea of what's going on this week. Now today and tomorrow, I believe it's just today and tomorrow, we have the G7. So we have Trump obviously involved in the G7, so you may hear some things. So that's going to be a news heavy thing in general. If reports come out, if something's said, etc. So just be very mindful of that as you trade today and tomorrow. As if he's meeting with certain people, certain things may be said, especially with how sensitive the market has been with tariffs. Now, I will also say that the tariff drama has been lessened in terms of its its importance on the market, right? It's not as important as it may have been maybe when we first started back here in April, when the first drama started. So some things could be said there, but if anything, it'd be more bullish than bearish if anything is mentioned in tariffs, because I think the bad news from tariffs is already baked into the market, and any resolution of that bad news would obviously be a bull catalyst for the market. So be mindful of that as Trump talks with some of these leaders, that we could see some sort of lessening or some sort of like easing of tariff tensions there, at least in my opinion, as we head forward to today and tomorrow. Outside of that, for today specifically, we do have the 20-year bond at 1 o'clock, so you want to watch that. But outside of today, again, today specifically, not too much. As we head into the rest of the week, though, we'll take a deeper look here. You do have retail sales tomorrow, pre-market at 8:30. That more than likely will impact the market to one degree or other. So just watch certain stocks that obviously would have an impact with retail sales. Obviously, your home builders not really going to be too impacted with retail sales, as would your Kraft Heinz, right? Just two random things, right? So be mindful of that into tomorrow. Not really too much going on tomorrow. Pretty smooth day, unless you're having exposure to Canada. You do have Bank of Canada meeting minutes, but outside of that, not much going on. Now, as we head into Wednesday, it's a very interesting setup we have this week, because Wednesday we have jobless claims. We also have housing starts, which we'll see how that works out. But most importantly, we have FOMC. And I'm doing a stream on Wednesday, so if you don't know, Wednesday 9:15 we'll be right here again, so feel free to pop on by. We'll walk you through that a little bit more. But the reason why this is very interesting is because we have the FOMC meeting and Powell talking about a rate decision, so whether we'll see a rate cut or nothing. Trump's obviously been pressing him very hard to cut, so we'll see what happens there. But why it's interesting is because we have Juneteenth, which is Thursday. So the market will be closed on Thursday. So typically, midweek holidays are funny, because when we have a holiday, fund managers, big money, so to speak, tends to get out of the market, right? They'll trade whatever on Wednesday like it's a normal week, and they'll take an extended vacation. They won't be available on the Friday. So there'll be potential for that low volume environment on Friday, which I talk a lot about on this program, and how volume can affect your trading. So that's something we'll talk a little bit more in depth on Wednesday when we do our FOMC prep and what to look for. But be very, very careful this week, especially if you're trading weekly contracts. You could see IV slowly climb, or just in general be elevated, depending on what you're trading, obviously. But we could see a higher level of IV in these first like 1 to 3 days, just because of what we're seeing in terms of potential catalysts, again, depending on what you're trading. But you could see a harsh fall off with FOMC, depending on how that goes. In combination with the holiday, you may have a bad time, especially if you're trading weekly contracts. So if you're on the buy to open side of trading, be very, very, very mindful of that. If you're on the sell to open side of trading, so you're selling contracts, you could find additional opportunity here. Now, it goes without saying, the market obviously is aware that it's closed on Thursday, so those contract premiums are going to be not as elevated as they potentially would have been like on a normal week. However, the potential increase in IV, you could find some extra opportunity there in specific names, especially like these hot retail names like Hood or Hims, where they are trading a little bit more of elevated IV as it is already. So getting IV crush on those kinds of contracts could give you a unique opportunity to sell some contracts on these kinds of names. Again, if you're on the sell side of things, but I would just be very mindful, very careful if you are on the buy to open side of things, if you're an options trader. So lastly, we'll round out with Friday here, which is the 20th, right? I believe it's yes, it is the 20th. The 20th, when we have retail sales, but outside of that, not much. A lot of catalysts going on outside of the U.S., so if you trade monthly contracts, be aware of that. Oh, one thing I forgot to say. What makes this week even more interesting is we have monthly OPEX. So we have OPEX this Friday as well, which is options operation. So every third Friday of every month, the monthly options expire. So there tends to be higher volume of contracts that are expiring during this time. Tends to be the potential for higher volatility as well. So that, plus the G7 stuff, plus the FOMC, plus the holiday, you kind of have a powder keg here. And depending on where we're sitting on the chart, depending where volatility is, depending on what's said, you could have some level of an explosive move either which way, really. Well, we'll get into that in a little bit. But all of these names, every single stock, basically, depending on how it's sitting, depending on how volatile the names are, how their historic volatility is, what their IV percentile is at this point in time, you could be in a very treacherous spot if you're not careful, especially if you're a day trader or even a swing trader. This week specifically, depending on your time exposure here. So if you're an equities trader, obviously you don't care as much, or if you're an investor, obviously it's a blip on the radar, right? But if you're someone who trades more short term, this week should be, I shouldn't say should be, this week has the element or the potential to be some level of more volatile than usual because of all these additional catalysts, because of the shortened week, and because of OPEX on top of that. There could be a lot of positioning or repositioning as we head into our next OPEX, which will be for July. Now, again, we'll have this conversation again on Wednesday, but as we head into July's OPEX, we want to look for Monday and Tuesday's price action specifically. So as we look at the market today, as we look at things on Wednesday, when we revisit next week, seeing how that OPEX opens and how this week closes could give us a better inkling on where we're going to go here near term. As you know, I've done a video on the bull and the bear. If you don't know what I'm talking about, it's up on my YouTube channel. You can go check that out. And we're kind of seeing both possibilities play out here on the market. But once we close out this month and move into our next OPEX, that's going to give us a better idea of where we're heading here, not only into July, but even into August, really, because of where we're sitting on the chart. So we could see the beginnings of either the next leg up, the next leg down, what's really going to happen yet. Now, again, if I'm hanging my hat one way or the other, I'm leaning more bullish than I am bearish, but that can change this week. Things can be said. Someone could drop a bomb somewhere they shouldn't. Things can happen, right? So let's not remove things out of the realm of possibility, but look at things from a very risk perspective, as I like to tell you guys on this show, where we look at things from being risk on or risk off. And the way that we're sitting this week, you may want to consider a more risk off position, or at least reducing your exposure until we're through this week, and then you can always increase your exposure when you have a little bit more confidence in the market. Again, doesn't necessarily mean bearish or bullish, but it means be careful, right? 2 minutes into the open, so we'll get back into the market here real quick. But before we do, and before the market opens, guys, I asked you twice a stream. I'm going to ask you once now. I'll ask you once again later. Do me a quick favor. I've got 42 of you watching, which is a little low for a Monday. I'm surprised. I'm guessing everyone's sleeping in. Do me a favor, whether you're watching on YouTube, Instagram, or over on X, drop a like on the stream, drop a comment, share, say hi. I didn't see anyone say good morning. Good morning to all of you. Hope you're having a great day. Hope you have a fantastic weekend, or week. But just drop some sort of interaction with me. Helps me very much. Again, I am a very small fish in a very big pond of other people that your 2 eyeballs in your head and your 2 ears could be watching and listening to. So I appreciate your time that you're spending with me on this beautiful Monday morning. All I ask in return, no money, just a second of your time to click a button, which I personally don't really care about, but the algorithm does. So if you could just like the stream, drop a comment, whatever, some level of interaction, I appreciate it greatly. Thank you very much for your support. Okay. Like I said, we got about 1 minute here into the open. Right now, SPY sitting around 643. Once we get into the open, we'll look at our sectors as well to kind of get an idea of what's looking strong, what's looking weak. I like to wait for a first minute or two. I do sometimes with you guys. I'll show you the sectors beforehand. That way we have an idea of what to look at into open. But especially on a Monday, I like to let things play out a little bit. The one thing I want you guys to notice here that we're already seeing in open right now is the IWM is up almost twice as much as the SPY and the Qs respectively. So interesting actually that we're both seeing both the Qs and IWM up pretty considerably this morning, all things considered. And we're seeing VIX down, obviously. VVIX is at that 113, so we'll keep an eye on that. We'll go over that in a little bit. And once we have the market open, we'll look at our Mag 6, which all are green, except Google just went red, so it's farting around a red-green area there. So we'll see here in a moment. And don't forget, right before the market opens, in about 30 minutes or so, we're going to do our Israeli versus Iranian conflict segment, where we're really going to talk about, again, nothing political, focus specifically on how the conflict right now could affect the market, could affect your investments, 4 ways on how it already has or already has impacted things that we've seen, and 4 things to look out for into the future. So it's not necessarily going to be, again, political in any realm, not talking sides or anything, but solely talking on your money and the stock market and what could happen in the stock market, taking this conflict into consideration. Okay, market's open here. Looks like we wicked down at 600. Low was 623 on the open candle here. So wick down a little bit as we zoom out here. Remember, we have the LOI to the upside that's 601.92, but we have the one to the downside too. So we're in a big gap here again. that 592.65. So we're going to want to keep an eye on this. Watch this upside LOI as some level of resistance. If we can power through this with some level of volume, that'll be a good sign. As long as we're north of the 601.92, the bulls could hold things a little bit stronger than they could if we're beneath it, for what it's worth. So we want to be mindful of that as we head into the open here. Looking at the Qs right now, big pump here right off the open on the Qs. 531.71 and still going here. Nice $2 rally off of the first 1 minute candle here on the Qs, and another $2 rally here on IWM. Wick down and now starting to push back up. $2 gap here, I should say, off the open, not a $2 rally. So actually the Qs are looking a little bit stronger than IWM here, looking just solely at the open. But either way, good sign all things around. When we see all the indexes going together, it's a very good sign. There's no divergences, right? It's showing everything's going up at the open here, which anything could change. But for now, solid open. VIX at a 1970. So again, if you're a bull, you want to kind of see the VIX sub 19 to be a little bit more comfortable. We want to see this get back down. Honestly, 1830, I'd feel a lot better as a bull. But right now at 1916, obviously still elevated, especially after Friday's move. So we'll watch that as we go through the day. Your VVIX still elevated at 113.37, which I believe that hasn't updated yet. So we'll come back to that. And UVXY at 2140. Watch for UVXY to get back sub 2087 realistically. Let's go back. Let's check out NVIDIA. We'll flip through our Mag 6 here as we're at the open. Then we'll check out our sectors and kind of see how things are sitting right now. NVIDIA is still above that bull line. So like I mentioned to you guys, if you're a bull, you want to be bullish on NVIDIA. You want it to be above 141.36. If it's above 141.36, it's bullish. Plain and simple. And again, we're speaking from an investor standpoint. So as long as it's north that level, it's going to be bullish. It will stay bullish, at least in my humble opinion. Going back to my most hated Mag 6, Mag 7, whatever you want to call it, stock, Apple. This is looking bad. It's still looking bad, and I will continue to say it looks bad. And once it gets under this level is where I would consider a short, and I will continue saying it on this program. This 195.83 level. With that being said, it does have this lower Bollinger Band right beneath it, so it could wick down just like it had over here and give a false breakdown here. So it's not something you want to rush, but if we do see a confirmed break of this 195.83 with follow-through, meaning volume picks up on it too, I will continue to say it. I'll say it many times. We will visit high 170s, low 180s, somewhere in this realm, very, very likely, which will be a headwind for the overall market as Apple is one of the largest names on the market, obviously. Flipping back over to Microsoft, like I said, once we're above this old all-time high, I'm just biding my time for a short. I have not taken a short yet on Microsoft. It's actually showing strength and continue to show strength. Volume is actually pretty good over that old all-time high and still holding that level. So this is not something where you want to step in front of a steamroller here and try to short Microsoft yet. When the opportunity shows itself, that is when you want to consider that opportunity, but it's just not there just yet. So watch Microsoft still. I like the short side exposure here. Not yet though. Google, interesting movement here on Google. As long as it's holding this 174.28. Again, I like Google quite a bit. I love its weekly chart as it's sitting. Volume's actually been pretty steady. 5 green weekly candles in a row. The last week's one wasn't too great, but we'll excuse that. Again, full transparency on Google. I have a long open at 162.64, so I am long this name. Amazon North, again, I'll keep saying it, $200.11. It's bullish. It will stay bullish more than likely. Yeah, that's pretty simple. And Tesla, as long as it stays sub 260, it's going to be bearish and it will stay bearish. Now, again, I'm talking from more of a longer term standpoint. I'm not talking if you're day trading. It could be a little bit different perspective, obviously, but more longer term, that's what you want to look for. Now, I will say, if Tesla can hold this general area and get over 331.89, there's a good chance it actually could get a near-term reversal here and pop that 360. So, Tesla's actually looking like it could get a reversal here on the daily chart. And even the weekly's not awful. Obviously a high volatility name with the last 3 weeks, how it looks. So not out of the woods by any means, but definitely something you want to keep on your radar if you like to trade Tesla or if you're already long Tesla. Going back to the market, let's just check in. Still rallying off the open, which is good to see. Again, that number to keep on watch today is 601.92. We'll pop back to that momentarily. Let's go check out our sectors for the day and get an idea of where we're seeing some strength, where we may be seeing some weakness. And across the board, everything is green with the exception of healthcare. Down in the open here, but looking like we might get a bounce back. So let's keep an eye on XLV. See what else is strong today. XLK, so your tech ETF, very strong. It's good to see. Notice how your energy is going red. Now, we'll talk about this when we get into the Israeli conflict, but because of the Iranian-Israeli conflict. But energy, your oil names, very, very strong, obviously off the back of the conflict. I shouldn't say obviously, because maybe you don't know. So we'll get into that in a little bit. But what you want to be looking forward to if you're a near-term bull. Now, let me phrase this very carefully. We could see XLE go red while the market goes green and everything else goes green. I want to see XLE go down, come down with tech and with IWM going up specifically. That would indicate to me that the market is going from more a risk-off position to a more risk-on position, because if the market is going more risk-off, you're going to see more longs open in oil names, which could be an opportunity if you think the conflict will get worse, or if you think the conflict will continue, whatever, what may have you. So you want to keep a tight eye on energy, on oil names here, very specifically. Watch crude oil as well. Those are going to be the things you want to keep on watch, especially in this time. Anytime there's some sort of like a new war, I should say. Obviously, the Ukraine war thing's still going on. But anytime there's a new conflict, something new's happening, those are the things you want to look for. Looking out at the rest of our sectors here, actually, healthcare is trying to go green, so we might have a full green across the board, which is interesting. Materials having a good day, up about 1%. Real estate down a little bit. Industrials up. So this is a nice little bounce back after what we saw on Friday. Financials up 1%. Consumer discretionary up about 0.6. Com services up 1%. Anytime you see one of these indexes up about 1%, so any of these sectors, when they're up over 1%, that's normally a very strong day for that sector. So just to put it in perspective, anything over 0.5 is a pretty good day for most of the names in that sector, that ETF, right, that realm. But anything north of 1% tends to be a very strong day for a lot of those names. So those are the names you can look for momentum, or a lot of strength in, or even to take profit in if you're looking to de-risk a little bit. So you're seeing that today in tech, you're seeing that today in materials, you're seeing that today in financials, and in com services. So a lot of strength across the board, even utilities almost there as well. A lot of strength across the board. Healthcare, they really only laggard, and it's about to go green. So very, very interesting when we see all the sectors green. Let's see if the market's green and holding green. So this is interesting to me when we see IWM coming down. So remember, I use IWM kind of like a barometer of sentiment, right? This is your Russell 2000. But to me, how I like to look at IWM is, how are retail traders feeling? It's your smaller cap names, your medium cap names, and it's more volatile than the SPY. Obviously, as SPY does so well, if there's a name that's number 499 or 500 that's doing really poorly, guess what? It gets removed out of the SPY and a new name's put into the SPY. That's why it's the top 500 names. And that's why you should never really invest long in the IWM, because as soon as one of these names is at the top of IWM, it's the top of the Russell 2000, it's doing fantastic, it tends to get plucked and put into another index. So sidebar there. But that's why I like to look at IWM as kind of your barometer for how retail is holding the market, how retail is looking at things right now, because it could kind of be indicative of how people feel. And that's how I like to use it. And as we're seeing right now, people are not feeling great, even though the sectors are all showing otherwise. And we're seeing tech, actually, so your Qs, hold up pretty good into the open, along with our Mag 6, with the exception of Amazon and Google here, a bit flat, actually holding up pretty well. So this is an interesting open. And as I like to do on Mondays, most Mondays I don't hit the gate running. Most Mondays I like to see some data come in to get an idea of how things are moving. It's the start of a new week. You might see people reposition, especially this week, especially with everything we talked about. If you watch the stream from the start, there's a lot going on this week, so you want to be very, very conscientious of everything that's going on. And you might already see people starting to position themselves now, and I mean, they will continue to, but you may already see some of that positioning as it stands right now. And you also have to keep in mind that IWM gapped up over 1%, so you're actually seeing kind of a script flipped here. You're seeing you're seeing a very clear divergence here in IWM and tech. So money is actually seemingly coming out of your high growth names, your Russell here, and rotating into tech pretty strongly here at the open. This is so this is what's called a divergence. It's a strong divergence between the two. When one thing goes one way and one thing goes the other, they're diverged. And as you saw at the open, we kind of saw a little bit of divergence here, but IWM started to peak back up in the first 3 minutes I'm talking about. where all the markets were all going the same way. That tends to be your cleanest trading days, when you see markets not diverge, where SPY, Q, and IWM all go one way. Markets aren't diverged, so the feeling between everyone, so to speak, is that we're heading one way, up or down, doesn't matter, right? Where there's no divergence in opinion, so to speak, on stocks. Most stocks going up, most stocks going down. When we see a divergence like this, where the Russell's at low a day and the Qs are not at high a day, but essentially at high a day, you could read into that a little bit more. So now what you want to look at is something like your VIX. VIX is still moving down, so we're still seeing volatility come out of the market. We're seeing UVXY at lows. VVIX, I knew that wasn't right. Okay, VVIX did update. It's 107.17. I knew it wasn't 113. So we're seeing volatility come down. We're seeing tech go up for the most part, and we're seeing the Russell go down for the most part. So we're seeing essentially what I'm marking this as, and let's see if my sectors are correct in proving this. XLK at highs. So you're seeing money rotate into your tech names, so your Mag 6, strong tech names, and money rotate out of your smaller caps, at least of this open right now, or at least as this time, which is very indicative of the market. Depending how you look at it, risk on, more than likely. The reason I say more than likely is because it's supported by the thesis that the VIX is falling, and as the VIX is falling and money is flowing into the Qs, we're seeing more risk being taken on in general in the market, even though IWM is not really necessarily backing up that thesis as of right now. In fact, IWM is moving pretty bearishly here at the open. Now, to be fair, IWM did also gap up the most. So IWM tends to have more exaggerated moves than SPY and the Qs, so it's possible that this is some level of balancing out, so to speak, between all the indexes. So very interesting open here. We're getting near that 601.92 on SPY. And to me, this is actually where I would, despite everything I just said, just looking at it from a candle perspective, this is where I'd actually start to consider a short on SPY, actually. A lot of wicks here, 1, 2, 3, 4, 5, 6 wicks up here at this price action. So that's showing you that there is a lot of people selling. There's a lot of people taking profit, anywhere from 601.55 to the high a day. And you have your POC here, which can be treated as your trigger at 601.43. So you're seeing liquidity here being zapped. So there's a big sweep up here. People are selling, people are taking profit, whatever. And now, as I'm talking to you live, we will more than likely see some level of downside push, maybe to like 601.11, not necessarily dramatic, but getting a sweep down here, 601.11, and it could go lower if that level breaks. So let's see if I'm right. Now, with that being said, you could come down, wick off the 21 EMA, bounce back up and get over that POC. Like I said, this POC, that green dotted line there, is going to act as your trigger level. If that trigger breaks with confirmation, which you're trying to do right now, we'll see. It could just be it could recover right back up. You will see a pull down to 601.11. You will see 601.11 break. You'll more than likely get back to like 650-ish. If we get a confirmed break, which actually, the most bullish thing you can have is a failed bear move. And if we get a candle like that, that is a more bullish candle. At least we're looking here on the 1 minute chart, so take everything with a grain of salt. Where you wick it down, so you saw price action come down, so people were selling, right? But it closed higher than it was before. So that's even better, because now you're saying like sellers had the chance to step in. They weren't able to step in and push it lower. Consequently, the price closed even higher on that one candle, showing that there's more interest in buying at this price. At least, again, in this very small microcosm of what we're looking at here on SPY in this 1 minute chart. But it is very, word I want to use is distributive here. There's a lot of liquidity here, right sitting around the 601.50 area. So I wouldn't necessarily rush to a short, again, unless we have a confirmed breakdown here. And I wouldn't long either unless we're over 601.92. I would be more interested in a short under this POC. That's just me. Like I said, if we get a confirmed break, you're seeing 601.11, and you're going to go back to 650 more than likely. We'll come back to that momentarily. Qs are pretty strong though too, so you don't necessarily want to short short when the Qs are pushing up here, and IWM's looking like it's going to try to rally off the lows as well. So you are seeing support from the broader market here as we are going here. Hey, good morning, Adam. SPY is rejecting the GP, pulled from high to low in the daily chart of the smaller range. Interesting. Well, it might be rejecting it now, but it may be pushing through. That's a solid candle here we're seeing on the SPY. And this is why I said I don't rush that short, because you never got a confirmed break of that trigger. So anytime you hear me say like a trigger level, that's a level of important support or resistance, right? If that level does not break, then it will be easily reverted 9 times out of 10. So if I'm already in a trade, if I get near a trigger level, that's typically where I go runners, or definitely trim out some risk, maybe put a stop on. It's all about not lying to yourself, essentially. So now we're going to look to see if bulls can push this 601.92. You're getting a lot of support now from the IWM. IWM rallying off the low of the day, and the Q's pushing the high. So now we're seeing things not diverge as they were looking diverged before. Now we're not seeing divergence, which is good to see. What we want to see, we saw a really nice volume there on that last 1 minute candle. You need follow through here, because now this 601.92 is also treated as some level of resistance until we power through it. So theoretically, you have 601.92 and 601.46 intraday here, right here, as very important levels, both for the bulls and the bears. So we'll see what happens here. VIX is still pushing down. VVIX is getting a little green here, while the VIX is going lower. So this could be the first inkling of a potential volatility reversal, which will more than likely favor bears over bulls. That being said, UVXY is also at the low of the day. Apple's not looking too great. Nvidia's okay. If it can, it's iffy. It's got to start pushing up like right now, but it's okay. Microsoft's a little iffy too, unless it can get some volume here. Google's just flat. Amazon's pretty flat. Tesla not looking great. I like the short side more than the long side here. See me put my money where my mouth is. I'm gonna look at 1 DTEs just to cover my butt a little bit more. Looking at the 600s. For tomorrow. All right, I'm long the 600s at 156. And this trade's valid as long as we're sub that 601.92. We just tapped the trigger level here. And I got the contract right here so you guys can see as well. High a day on these contracts are 225, so it was near the open. And again, this is a 1 DTE, so we'll see how this works out here. I don't necessarily want to be short today, but because of how this is playing out right now, I like the short side more than the long side. Now, what I will say here, in the event that we stay north of this POC here for the next like 5 minutes or so, then I'll have to close out, because there will be a good chance that we'll break the high, because things are actually pretty strong this morning. However, if we break down here, like I said, 601.11 is more than likely, and then 650-ish will follow through very soon thereafter. So, and those contracts are still sitting right around my entry here at 156. So if you like the idea, you can consider that. I wouldn't necessarily 0 DTE this put position, mainly due to, like I said, there is a strong chance the market's strong right now. So I'm kind of what's the word? Going against the grain. And there you go. Do we get news on that? Let's see. That's a big push. See if we get volume here. If this leaves a crazy wick, then that's going to come down pretty gnarly. But let's see if we got news on this. Good volume. Something had to have happened. Leaving a wick right now. What are we doing here, Spy? What are we going to do? I don't see any news. If you guys see news, let me know in the chat. I am not seeing anything that caused a nice little pop there. Outside of Russia is discussing Iran with the US, which doesn't mean much to me. Okay. Good volume on that candle, but let's see if we can follow through. We did break that 60192, so I would rather be a bull here. If we see it back test the 60192, bounce and go, then I definitely want to get out. We are above our Bollinger Band here, though, as well, so I don't want to necessarily close out of risk here. Or I should say out of fear here. Give it another minute or two and see if we can sustain over this level or not. Those contracts right now are at 137, so they're near the low of the day. Something had to have happened. I don't see anything, though. I don't see news. I feel a little silly. I'd like to at least know what the news is to cause a pop, if there is a pop. Guys, in about 5 minutes or so, we're going to do a little segment on the Israeli and Iranian conflict right now and how it can affect your portfolio, so make sure you stay tuned for that. Like I said, in about 5-6 minutes or so, we'll probably roll into that segment. All right, so we're coming down for the back test. So let's see if this back test and bounce here, then I'll want to close out. If we back test, break, and there's more volume, then I'm going to stay in my put position. This is the reason why I said I wouldn't 0 DTE this. Because even if I took a loss here, I'm only losing 10 cents a contract, so it's not even like a... it's not the end of the world. It's good risk to reward here. I don't see any news at all. I feel silly. Let me check something else. And please, if any of you see anything, let me know. I'm just very curious on what that pop was on volume. Netanyahu says we're telling the citizens of Tehran to evacuate, and now we are taking action. Okay, that's not it. I have no idea. It's a weird time of day for that too. What time was it? 9:50. Okay, so we wicked it. So now I want to keep probably look at a stop at like 130. What's the low of day on these? 125. If we break the low on these contracts, I'll close out of them, and that'll be my risk. Because now we've tapped it, we broke it, came back down, back tested it. So now I'd rather be a bull than a bear here. So like I said, I'll risk about $1.25 on these, and I'll close out if it cracks $1.25. Because it could just kind of leave a double top and come back down. But again, being honest with myself, over the 601.92, I'd way rather be a bull than a bear. All right, be ready to close these out because we just broke a new high. However, those contracts have some level of inflated IV because they're still at $1.30. So I'm being a little patient here, but not lying to any of you. I would much rather be a bull than a bear here. This is just grinding up a little too hot. At least for by my summation, this is looking a little too steep. And if I was a bull and I was long here, I'd be taking profit. So I like to try to think of things from both sides of things, where if I was on the other side of the coin, what would I be doing? And I would probably be trimming out here. Okay, now I'm closing out. Oh, that was unfortunate. Well, didn't lie to myself. That's okay. It happens. And as I talked you guys through it, I was right. It was a risky short. We took a short. Acknowledged that if that 601.92 held, more than likely going to get some level of a bull push. We did. We even tapped the next LOI at 602.99. So that was actually a really solid move by the bulls. What is this volume? Something's happening. I don't like feeling like I don't know what's going on. So something's happening, and I don't know what it is. I don't see anything in my feed. We're getting a lot of volume through. So unless this is all positioning already this week, which I'd be a little surprised at. Let me check another source here. And again, if anyone wants to tell me in the chat, that'd be very helpful, because I don't see anything. Oh, there it is. Just came through right now. Iran signals it wants to de-escalate hostilities with Israel. Well, can't plan that. Can't control that. That's just one of those binary events. If you're on the right side of the trade, it works. And if you're on the wrong side of the trade, it does not. So, is what it is. Can't win them all. In fact, statistically, for this year and for last year, hold on, let me check my journal. Last year, 88.3%. This year, my weekly win rate, 91.75. So I'm doing a little bit better than last year. Oh, more news. Iran stated privately it will resume nuclear talks if the U.S. stays out of the fight. A battered Iran signals it wants to de-escalate hostilities with Israel and negotiate. Okay, so peace is good for the market. Yeah, I can never say your name, man. I'm sorry. Tenencion. Spell it phonetically for me in the chat, because I can never say your name. But I agree. I wish there was a news. Well, there is a news source that's that fast. It's called a Bloomberg terminal. But that also costs a ridiculous amount of money. So unless you're like a hedge fund manager or something, you really don't need a Bloomberg terminal. But if you're just a regular Joe Schmo like myself, you don't really need a Bloomberg terminal. It's just, again, this is one of these binary events we have no control over. It's great. It's great for the world. It's great for the economy. There's an argument to be made there, which actually will be a fantastic transition into our segment here. So let's actually roll into our segment on, or a special. It's technician, but spelled stupid. Cool. Okay, that's easy. I can say that. Let's roll into our segment here, and I put some notes down, so you might see my face light up a little bit, but let's roll into, and I'll keep SPY up so you guys can watch. But we'll roll into our segment here on the Israel and Iranian conflict. Hold on, we're still getting news through. Iran state privately resumed nuclear. I already read that. On the news, we saw oil drop. I'm just looking at my other chart here. Oil came down and gold came down off of that news. So we're seeing some de-escalation and risking on in the market, not risking off, which is bullish. Let's get into that. All right, 1 second. So right now there's a massive conflict in the world between Israel and Iran. And as an investor, you may be wondering, how does this affect me and what can I do? Well, actually right now, as I'm recording this, we actually just found out that Iran looks to ease conversations here, or ease talks with Israel and somehow de-escalate things, which, as you can see on the chart here, caused a bullish reaction. But what I want to do and what I want to highlight here is what we have seen already with the Israeli-Iranian conflict, and highlight things of what to look forward to or what to keep an eye on. So I have 4 bullet points to look at for what has already been affected, and 4 bullet points of where you could see some risk and some potential opportunity. Now again, this whole thing is not going to have anything to do with politics. I'm not picking sides, not speaking on anything in that regard, but I'm solely focusing on how it affects you, your portfolio, your money solely. So that's all we're focusing on here. No agendas, whatever, just focusing on basically the nuts and bolts of it, how it affects you and your money. So how the conflict has already affected the market so far. So we've seen that gold and oil have already spiked off of the war. Spot gold has been climbing now for some time, and it has continued to climb off the conflict, hitting multi-month highs. And oil has been slowly turning around the last few weeks as we headed into this conflict, and then we saw a spike on crude oil. Now, whenever there is a period of instability, whenever there is uncertainty, war, even economic uncertainty, you see a lot of people flood into specifically gold, but also oil. Oil, you'll see a lot of that with war specifically, but gold, because people are taking their assets out of potentially risky AI names or risky stocks or risky bonds, whatever they're investing in, and they put it into something that tends to hold its value, like gold. So seeing that trend of gold going up and oil going up is a very indicative of the market moving more to a more risk-off position. That being said, as we just got the news in right now that, or at least the first taste of news that the Iranian conflict may be cooling or looking to de-escalate, you're seeing gold come down, you're seeing oil come down off of that information, which is great to see if you're someone who wants world peace. You'll also notice that the leadership of the market starts to shift. So this is what we've already noticed. And again, this news just came out as we're talking about this right now. So it's a little hard to show, but you'll start to see or we had saw, money starting to rotate into defensive sectors. So you see money move into sectors like XLE and XLU. So what you want to look for if there's a continuation of conflict, so if this conflict does not resolve, you want to see money rotate out of, or at least you want to be aware of, money potentially rotating out of XLK, and conversely having the Qs go down, so that's your NASDAQ 100, and move into XLE and XLU. So you want to see if there's what's called a divergence. When one goes up, the other goes down. So you want to see if the Qs are going down while XLU and XLE are going up. Now that'd be another sign, or another sign that's indicative of risk off behavior in the market. Now, one thing I want to focus on specifically, as we are now seeing again this reaction in real time, is what we notice in the defensive sector. So specifically with war and conflict, who makes money? Anytime there's opportunities, when things happen, who makes money? And when it comes to war, it's going to be your defensive sectors. So defensive names, I've got 3 of them on the watch list here. We'll pull up in a moment here. General Dynamics, Northrop, and Lockheed Martin. What we saw from these names, they all saw an increase in both price action and volume last week. So let's pop over there real quick and take a peek at that. Looking at the weekly candle here, here's the last week's candle. This is NOC. So like I said, this is Northrop. You wick down, big candle up, big push up on higher volume than even the last 3 weeks, right? Pretty good volume. Lockheed Martin, same story, crazy wick down, big push up and closing above on the highest volume since April, big move up. General Dynamics, same sort of trend, not as strong, but same sort of trend, higher volume than probably the last 4 weeks or so, big push up, closed higher. That's another sign that's indicative of money rotating into the defensive sectors. You look at like these bigger names to get an idea of where the trend could be pushing. That's something you want to keep an eye out for. And again, we're focusing on right now what has already happened, and then we're going to focus on where we could go. Let me flip back to the SPY in case you guys want to watch that as we discuss here. And then you'll also see that global sentiment will start to dampen, but not necessarily get panicked. Like people aren't freaking out or anything, but you'll start to see, again, I want to keep saying risk off behavior. So you'll see that as of right now, actually, and even through the conflict, the equity market's actually been holding up pretty well. We've actually been pretty steady, and obviously now today, even better. But typically when there's a conflict like this, we see that the equity market starts to get some sort of negative reaction. And arguably we did see that on Friday. We saw a pretty decent red day with decent volume. But what you want to keep an eye out for are people hedging. So we want to see, and what we have already seen is the VIX went up, right? And we want to keep an eye on, especially if this is now, well, it's already happened and going forward, in options activity, especially on the put side, you may see people hedging more than normal. So if we see volatility slowly climb, which today it's down, which is great if you're a bull, but if we see volatility slowly climb and we see the number of people opening puts, so the volume of puts in general are climbing, especially if you're someone who uses like options flow to trade, that's going to be another sign that the market is looking to stay risk off into the near term. So we've highlighted 4 things that have already happened with the market with the Israeli and the Iranian conflict. So now let's look at 4 things that could happen, or where we want to look for both risk on, risk off opportunities, and if there are any opportunities really, if there's anything you should do, and what might fit you as a trader or an investor, swing trader, whatever you are, however you manage your money. Obviously, everyone does something a little bit different. So this is kind of like a greater overview, and then everything I'm telling you, you can apply it to your style, however you trade, however you invest. Take this information and do with it what you will. So obviously I already alluded to oil and how it's moved, but you also see the energy stocks as well start to push up. Same kind of thing, where what you want to look on is if the conflict develops a hindrance of the supply of oil. And specifically, I don't know how to say this, I wrote it in my notes here, the Strait of Hormuz. It's a very important strait over in that area of the world where 20% of the global oil will pass through. So if for whatever reason a conflict escalates into this area of the world and it causes the supply to be impacted, oil prices could go through the roof, mainly due to the fact that we're cutting off the supply. So if you've took economics in high school, you understand when supply goes up, demand goes down, supply goes down, demand goes up, right? So if there is a attack on it, some sort of hindrance for whatever reason, we could see oil prices in general skyrocket, and as consequently, your oil stocks will also skyrocket. So how this would phrase is you would see a downside risk for the overall market for like equity names in general, but there could be a potential upside for energy stocks. So anything in your XLE, think ExxonMobil, Chevron, oil stocks, right? Oxy. That's where you could see if the flow of oil is impacted in any which way through this conflict, where you could see oil prices spike, and consequently these names that work in that industry also appreciate in value. Now, we could also see some risk-off sentiment fly and triggering people to move into safety. So we already kind of alluded to that a little bit, but anytime there tends to be heightened geopolitical risk, we see a lot of money or a lot of investors de-risk their portfolios, whether they buy hedges like puts, whether they buy some VIX option strategy, whether it's longs or some sort of strangle, whatever, or they move into other assets such as gold, such as treasuries, or even the dollar directly, or other currencies. So you could see an opportunity here if you are someone who believes that the conflict may get worse or escalate, which, as I said today, live as I'm recording this, we saw that it's looking like we're de-escalating, which is great. But if it seems like there is escalation, people in general, sentiment is going to look to be risk off. You'll see gold appreciate, you'll see treasuries theoretically appreciate, and you'll see the dollar, or other currencies, depending on what you're looking to trade, appreciate as well. So theoretically, in conclusion, for that point, equities could sell off, and other more defensive areas of, I don't even want to say the market, I want to say investing, right, could increase. Now, you also want to be mindful of defensive sector tailwinds. So anytime we see escalations in conflicts, geopolitical tensions, etc., we tend to see global military spending increase. Obviously, if there's a war, people are going to buy bombs, they're going to buy drones, they're going to buy whatever, and that's why we discuss those other three names that are in this defensive sector, NOC, LMT, and GD, as potential opportunities if you believe this conflict will get worse. Because you could see a tailwind of these global contractors actually getting some rotation, even if the market performs poorly. So you may want to consider some level of a defensive position in these names if you are someone who believes the conflict may get worse. What you want to keep an eye out for, and we already alluded to it when we talked about the weekly candle, you want to look for increased volume and see if I'd look at the daily, watch day by day by day. Regardless of the price action, I would want to see if volume's ticking up. Ideally, I mean, obviously, I should say, we want to see the price go up, but to see if there's money flow into it. And then if you're more on you want the market to be risk on and you want to invest in equity names, then you want to see those names come down on higher volume. So depending on how you feel, you may want to keep these names, these specific names. I like to get a barometer on the defensive sector specifically. So again, NOC, LMT, and GD. Watch them because I believe they're going to give you a little bit more of an inkling on how and where the market may be going, I guess I should say. Lastly, we've discussed the VIX. We're going to talk about volatility again really quickly. Whenever we see conflict, especially in the overnight market, when something happens, someone bombs someone else, whatever thing happens, we tend to see a spike in the VIX. Now, this could offer two different opportunities, whether you are looking to short the VIX, which long-term is not a horrible idea, but depending on how you do that, what vehicle you use can be not a great idea, or whether you're looking to long the VIX, anticipating a potential risky move in the market or potentially increased volatility, more bad things happening in general. So you could find trading opportunities in volatility in general, or volatility adjacent instruments like your UVXY, VIX is another volatility index, VXX. There's all these other ETFs that you can use as well. But the VIX tends to, and you go back in history and we could look right now, the VIX tends to surge rapidly and then drop out, decay, etc. So if you're not exposed to a long and the market takes off, or I should say VIX takes off, which you see here I mean, this is the daily candles. So 1, 2, 3, big push. I mean, this is crazy volatility move. This is back in April, from 20 to 60. And then, I mean, obviously, these are big moves either which way, but it always tends to decay. And even when we got a spike here on 523, you could even call it for 2 days prior, we were down at 17, it spiked all the way to 25. The next day gapped all the way down to 20. So if there is a big spike on volatility, what I personally like to look for, if I am looking to play volatility, and depending on how everything else looks in the world, I look for the downside, because I would much rather short the VIX than long the VIX. Now, if I am long the VIX, there are very specific scenarios, and I'd be very careful, especially if I was using options, because it's a very speculative thing. But if you long the VIX at the right time, it could pay very well. But a lot of the times, long in the VIX tends to be, at least in my opinion, a losing trade strategy. Obviously, it can work, and just look at this chart right here. It does work. But if you are someone who is long the VIX right now, or you're thinking the conflict's going to get worse, you have to think of it this way. And we're looking at the VIX right now. We're down 10% because of potential de-escalation news, right? The conflict's already happened. The market's aware the conflict's happened. The conflict is continuing to happen, at least at this point in time. The VIX is sitting where it's sitting right now, knowing this information. And even if we remove today, even if we go back to before that news came through, the VIX was at 19. We'll call it 1950, right? So the VIX was sitting at 1950, knowing there's a conflict, knowing that people are getting bombed. It still gapped down today, knowing that this was happening, knowing that there was things going on in the world, right? So taking a long on volatility, you have to be very precise, and something really bad has to happen to cause instability. Now, the last thing I'll leave you with as a reminder, the VIX is not a tool to measure volatility. What do you mean, Adam? It's called the volatility index. Yes, it is, but the VIX should be used as a means of price discrepancy. How the VIX gets its value is the difference in the spread on SPX options. So as more people disagree on price of what the SPX should be trading at, that spread widens. And as that spread widens, the VIX goes up. So it's showing instability in that sense because traders are not agreeing on what the price should be, right? That makes sense. Now, as people agree on what the price should be on SPX, the VIX will also come down. So having that understanding in the back of your head is really important, because it's not necessarily a bull or bear indicator with volatility, or even a volatility indicator. It's more of a sentiment indicator of how people are feeling at that moment in time on, are we agreeing on price or are we disagreeing on price? And understanding that piece, I think, makes it much easier to utilize the VIX if you want to implement it in your trading strategy. Now, that being said, that's going to encompass everything I have here for you, and a little bite-sized taste of how the Israeli and Iranian conflict could affect your portfolio, what to look forward into the future, and what to basically be prepared of if anything happens. Now, today, like I said, we did get this de-escalation news, which, as you can see here, the market tends to like. So we will touch base and see what happens here into the future. But you got everything you need now to be armed and at least be knowledgeable of what is going on in the market as it pertains to this conflict. If you enjoyed the video, don't forget to like, share, and subscribe. Cool, I recorded that. All right, pretty good. What did you guys think? Was that a good segment? I think that was a pretty good segment. I think we covered a lot of bases there. Talked about gold, talked about oil. I'm just going over my notes again. We talked about the rotation, talked about defensive sectors. Man, we covered a lot of ground. That was only 15 minutes. Volatility, rotation. I'm happy with that one. 15 minutes. Covered a lot of ground on that. That was good. Not mad about that. Wonderful. Okay, sorry, I'm just catching up on things that I missed while we were doing that. Let's just take a quick peek around and see if anything's changed. Yes, sir, fantastic. Thank you. Glad you enjoyed it. Let's see. Look, energy went red. Obviously, we talked about oil, so that makes sense. Big move. Look at XLK. Woo! 1.5. Beautiful. Materials up 1%. Industrials up 1%. Look at this. Look at industrials. Beautiful. Financials up almost 1.5. Yeah, the market loves this. Look at comm services, 1.5. So now this is indicative of the market taking risk on behavior. which is good. And this is why we don't lie to ourselves. So even though I took a loss on this contract, right, I would have had a deeper loss if I just held on to it and just was like, oh yeah, it will eventually come down, which it still could, but saved myself $40, $50 a contract. Don't lie to yourself. I walked you guys through that. Even though it was a losing trade, I told you what to look for when I'd close out. And even though the news didn't help us, obviously, on that move. And sometimes that's just the way the cookie crumbles, right? You just got to take the punches and roll with it. But you got to know when to hold them, know when to fold them. And that was a good place to fold them. And I'm happy I did. It worked out nicely. All right. Let me just look around here a little bit more. Yeah, we're just kind of stair-stepping our way up today, which is really fantastic. IWM at the high of the day here. Watch this 211.28 on IWM. Sorry, my cat was running underneath me. VVIX, watch this get under sub 100 here. That would be a very good sign to see VVIX sub 100. UVXY falling through the 4. VIX sub 19. Nvidia still pushing near the highs. Apple is starving off death for now. Microsoft another high. Google not getting as much love today, interestingly enough. Amazon's looking really solid, actually. And Tesla not looking too great, all things considered. Let's check out those 3 companies I talked about in that little segment there. NOC, not really coming down off the news. I mean, a little bit, but nothing crazy. Lockheed. And all these names are red now, keep in mind. GD basically unaffected. I'd look at more people are probably going to trade Lockheed. Let's see. 100. I'm just comparing market caps. 73. Yeah. I mean, I think most people think of Lockheed Martin as well when they think defensive sector. Actually, let's check out Boeing, because Boeing's a sleeper for the defensive sector as well. Boeing's up. Interesting. You could argue Boeing has defensive sector exposure, obviously. Now, granted, they had that whole plane crash thing, so that's a little different case here. That one's a little bit different. Wow, look at the SPY. If we can break this localized high, so this high on 611, 605.06 today, we're looking really solid. If no one messes up this week, if FOMC is perceived as bullish, I should always say perceived as bullish, we could make a new all-time high this week. I'm saying it. I mean, when we opened today, I think we were only 3% off all-time highs. So, market's looking decent. One thing I want to put on your guys' radar. So, in the event, and this is a little prelude to Wednesday, which if you don't know, Wednesday I'll be live as well at 9:15. Make sure you set a little reminder or whatever. I put posts up on my X so you could like it or whatever, and you'll have a reminder. If we do see a rate cut, which Trump's pushing on Powell really hard for a rate cut, so it's possible. But if we do see a rate cut, the market, after it's been in a rising rate environment, historically speaking, stagnates, it goes flat, so there's no more raising rates but no lowering rates. Once the first rate cut happens, the market has historically popped, gotten a nice upthrust. However, then has gone steeply into a bear market. And I want to find the statistic, and I'll prepare that for Wednesday. But that's something I'm being very cognizant of. Once we see that first rate cut, that's going to be my sign to not necessarily close out of the market, but I want to move stops up on everything, equity-wise. Now, conversely, look at this red monthly SAR. You guys know I love my SAR indicator. Red monthly SAR at 607.74. I would love to crack that. I gave you guys that statistic when the SAR breaks at least 70-point rally on SPY. And that's going back in time to where 70 points was a large percentage. It was like 50% rally. I'm not talking percentage. We're talking about points. If I want to talk percentage, I can't do this. I have all my lines here. Decent percentage. Go back and look. I got too many lines so I can doodle all over my charts. But that's what I'm very interested in, honestly. I'm very excited for that. Let me turn that off. There we go. No, I need my lines. There we go. Okay. Good thing I closed those contracts. I think that's what I'm going to leave you with, you guys. I think we're pretty good today. I wouldn't be short now. You saw how that worked out for me off the back of some news, high volume. I wouldn't chase the short. I wouldn't try to time the top today. As a reminder, we have the G7 today and tomorrow. So anything, just like how we saw with the de-escalation news, anything can happen that could pop or drop the market with someone being, in regards to, I'm looking specifically in regards to tariffs, and anything with raw materials. So keep an eye on that. If we see, because Trump's meeting with both Ukraine and Mexico today, I believe, and Canada. I think those are the three. If we see any news come out in regards to tariffs, which I think the bad news with tariffs is already baked in. I kind of already said this already, but if we see good news as it regards to tariffs, that will be good. And specifically with the Ukraine, we want to see not even anything with the war, but we want to see things with rare materials, rare earth materials. If we get some bullishness into there, saying like some sort of agreement that we're going to get rare earth materials, that's the stuff we want to look for specifically with the G7 if we hear anything from Trump in regards to that. Indeed, I am also aware of such historical behavior post-rate cut. Yep. Yeah, it's not a hidden secret. It is, the information's out there. So it is a risk factor if we do see that rate cut. The equities tend to get a pop and then a drop. So I'll try to prepare that for Wednesday so I could show you guys specifically, or at least talk about it a little bit more in detail. But I think that's gonna do it for me today. Nice, quick and clean one. I mean, we're at a normal time where I like to round things out. I'm not gonna trade this. I already got screwed the pooch down here, which is fine, and I'm not going to chase anything. That's okay. I already got plenty of long exposure, so I'm making money regardless. Here are your upside LOIs. 605.02. The weekly, actually it's right there, 605.06. So 605.02 and 605.06, huge level today. Watch that. Closing over that's going to be very, very big. So that's your localized high. So when I say localized, in that area, this recent time frame, so in this last like week or so, that's where that high is. So breaking over that high tends to pull more bullish behavior. So watch this 605.02 and 605.06 area very closely. If we break that with volume, we're probably going to get a continued bull move. Past that, 606.90, 609.55, and 610.78. Guys, we are $6, $7 away from all-time highs. We could do that this week. I wish we didn't have a holiday this week, and I wish we didn't have FOMC. I wish it was a cleaner week to trade. Unfortunately, we can't always get what we want. So it is what it is. Microsoft makes new all-times again. Yeah. That's why I said with Microsoft, I want to short Microsoft, but I'm not going to chase it. Like not that I'm not going to chase it. I'm not going to step in front of a steamroller to pick up a penny, right? It needs to show that it reverses first before I try to short this. And until then, I don't want to short it. It's just going, and I'm not going to step in front of it. And like I said, with NVIDIA too, watch this localized high on NVIDIA as well. This 145 even. We're actually... All right, let me pick my words very carefully here. If FOMC comes in as expected or dovish, we will make... If FOMC comes in expected or dovish, and there is no more developments as it pertains to war news, and there's no developments as it pertains to the G7, then we will make a new all-time high. In maybe this week. The holiday's a little funky, so early next week. Keep in mind, we have monthly OPEX too. So, like I said, even before the market opened, I said this is a powder keg where we're sitting right now. Both ways. There's a bull and a bear case both ways. And this is a powder keg. And that news is big for the market, as you can see. We've already erased that Friday fall completely. We're pushing here. We're almost over that. We're only $1 away from that localized high. So I don't want to sound so jubilant because I don't want to give you guys almost like delusions of grandeur, right? I don't want you thinking, oh, Adam says we're going to make new all-time highs. It's time to sink all my money in the market. No, not necessarily. I want you to remember what I said at the beginning. This is a powder keg. Powder kegs explode, right? We might have seen a little fuse light today. We see a little bit of a move. That doesn't leave us alone with the other catalysts. Again, G7 today, tomorrow, FOMC, holiday, OPEX. And this war that could continue. de-escalation talks could fail. Market goes down. De-escalation talks could fail, and God forbid, I don't know anything, full transparency, this is nothing, I don't know anything, whatever. Someone gets assassinated or whatever horrible thing happens. A bomb's dropped, etc. A lot of people die. Market's not going to like that, right? So anything can happen still. But assuming less volatile things happen, then we're looking really, really, really good for an upside push. The potential here, let's say it like that. The potential is there. And I like the potential I'm seeing. And I think that's a great note to end on with you guys. So hope you guys have a great rest of your day. As a reminder, I will be back on Wednesday at 9:15 a.m. Same bat time, same bat channel. And some will say you need a niche to trade. Well, I like to look at things from a different angle, and that is always what you'll get right here on the Atomcash angle. Have a great rest of your day, guys, and remember, precision beats prediction every damn time. I'll see you at Wednesday at 9:15.
The time has passed, and that's a wrap. You're armed with the angle and your plan of attack. While the show is at an